Hello, everyone. Before we get started, I wanted to just make sure that everyone can hear me. If you could maybe just type a Y for yes into the chat if you can hear me all right, I'd really appreciate it. All right, beautiful. So anyways, I just want to thank everyone for coming in. We've been putting this webinar off for a little while. Glad to get it going. And I wanted to introduce myself. My name is Shane Guth. I'm Wade's brother, actually, so we kind of work on this together. All right, yeah, lots of people can hear me. Perfect. So what this webinar is we're going to be focusing on just doing some coaching on the software. You know, we've had a lot of people that have recently signed up, and we really want to make sure that all of you, get your questions answered and everything. So we're going to be going through and just kind of making sure everyone understands how to interpret the software, what the lines mean. We're going to drill down on some setups, that have happened recently and what that means in our methodology, how you should be viewing that sort of things. And also just field any questions that, people have coming in. We've got a lot of people on, so we're going to try and get to as many as we can, but certainly we'll find some common threads throughout. As far as length goes, this is probably going to be about 1 to 2 hours. And if you can't stay for the whole thing, that's all right. We are recording it and we will be posting all of these, this one and all future ones in the classroom so that you can refer back to it a little bit later. And that's pretty much it. So just wanted to introduce myself, and I'm going to go ahead and pass this on over to Wade now, who's going to be doing the pretty much the entire thing. So anyways, Wade, go ahead, take it away.
All right, thank you, Shane. Good to see everybody on. Can you guys let me know that you can hear me as well? Just type in a Y. Just want to make sure we got our audio right. And I'm going to pull up my screen share here in a second. You can let me know that you see that too. Hang on. And I'm not going to lie. It's been a little while since I have ran a live webinar, so please bear with me. Okay, so I think I can see my screen. I'm hoping you guys can see it too. All right, thanks, Doug. Appreciate it. Thanks, Robert. Thanks, Simon. Thanks, Ishmael. Thanks, William. Thanks, Oberlin. Thanks, Larry. Man, we got a lot of people on here. All right. Awesome. You know, we still have people joining too. I knew that everyone was going to just jump on at like right at 11, so I kind of expected we'd get a trickle in. So still kind of trying to get as many people on before we get into the content here. So just a little bit about these sessions. You know, what we're trying to do right now with these is, these are supposed to be pretty informal. I know like when people run webinars, like they, are real glitzy and, full of mostly sales content. This is supposed to be kind of like a down and dirty session. I don't even have an outline. We'll probably develop a better outline as we kind of get through this, but the one thing I want to do is like what Shane said, we want to make sure you guys understand how to use the system. That's the first and foremost. Want to make sure you know what you're looking at so that you can get value from it and use it to its fullest potential. We on these webinars, that's the main thing, is just kind of drilling down. We're going to take some of your guys' questions and ultimately pretty much have you guys lead the webinar and where we go with it. Like I said, we will develop an outline, but this first webinar is pretty exploratory. I just want to get a feel for, where you guys are at as a whole, and you know, work from that angle. And you know, just kind of see where it goes. I'm expecting we'll probably be on here for about an hour, maybe more. But like I said, it's pretty open at this moment. So let me see. I'll make sure I got seeing my question box here. So you guys have a question box down there somewhere. I'm not seeing your guys' specific setup, but you should have somewhere where you can excuse me, where you can enter questions. And let me see, I'm still getting things adjusted on my end, so bear with me. We used to do webinars years ago with another trading group I was part of. Some of you guys that are on here, I know you guys have been with me for a long time. You guys remember the old days with the webinars. We had about 15 camera angles and all kinds of crazy stuff going on. So this is this is pretty scaled back compared to what we used to do a long time ago. But I think that we'll be able to get just as much benefit from this. Okay. Ishmael, I see you got probably, let me see here. I see you got, looks like maybe a tech support issue. We do have a new tech support email. If you guys want to take this down, it's the new tech support email, which pretty much everything technology related is going to go to, is support@tradeats.com, not admin. You could still use the admin, but if you send something there, it's going to get forwarded over to support and be answered from that email. So just FYI, we'll send out more announcements about that too. But if any issues you're having, Ishmael, just go ahead and send that over to support, and we'll make sure that we get you handled. Okay, cool. So we got people on from Australia, several people on, and it's 4 a.m. over there. So definitely appreciate you guys getting up early and being on with us. Question, will the recording of this webinar be uploaded today? Yeah, we're going to try to do that. You know, and I got to figure out where we're going to actually put the recordings. So again, this is all kind of a process we're trying to figure out, you know, what's the best way to go about it and all that stuff. So, okay. So I think we got a good amount of people on here. Got greetings from South Africa. Good to see you on, Dan. All right, sounds good. So I'm going to open it up to you guys. Questions about the software. I don't have like all the markets that can be viewed on here, but this is just a demo account I opened up with FX Choice that has a good range of markets. So if you guys are trading something other than a currency, that's why I have this up. We can look at silver, we can look at gold. I got gold up right now. We can look at pretty much all the currency pairs. So you know, we're just open for questions. Now, I will tell you, I'm probably not going to be able to answer every question. So if I see that a question comes through and I think it's something that the room will benefit from, then those are probably the ones I'm going to address more so. If you have questions other than that, you can send them to admin at Trade ATS, and we'll handle your more in-depth questions if they don't get answered there. But like I said, the goal is to get this, you know, where everybody can get some benefit from it. Okay, let me see here. Just trying to. Okay, we got our first question. So the question is, how can you tell when the trend is changing according to the software from William? All right, so let's get into William. What time frames are you trading? Let's start off with that. Let's see, and if I can't find your comments, we've got a bunch of comments flying through here. So if I can't find it, I'll just pick one. Okay, 4 hour and 15. I think the 4 hour and the 15 is probably the most commonly traded time frame time frame setup between everyone. So I think that's probably a good place to start. So let me get those set up. Nice run on gold today. Wow. So basically, you're always going off of a 2-chart setup. So we got our 15-minute for your entry time frame. You got your 4 hour for your trending direction. Okay, the simple way to understand if you're getting a trend change, literally you can go off of your supporting time frame color. For instance, right now we're in a confirmed long trend on gold. You can see we got expansion line right here. You can see that we're above on the 4 hour chart. It's obviously trending up. If you did see this 4 hour candle turn red, that would be a definite indication that you would want to start being careful, looking to get out of a trade. Now, I know that there can be a pretty wide range with that happening, so there's other indicators you could look for. Man, we got a lot of comments coming through. So let me see here. So, okay, in this particular chart, let me see what's happened here. So this one, we actually didn't get into confirmed trend on gold right now until this candle. You can see this is a candle we got the new expansion line on right here. So this was the very first, indication we got in that, besides the color change down here. But right here, it was confirmed above expansion. So right now, there really hasn't been a great entry into gold specifically. So this one, I really wouldn't, it's not there's been no great entry. Let's just put it that way. So this one, not a great trade. Let me find something that is set up a little bit better. I know dollar CAD's just been in a box. So on the weekly, let me check out pound USD here. Okay, we're in a box on pound USD. Let's check out euro dollar. All right, we got some stuff happening on euro dollar. So keep in mind that this week we are leading up to non-farm payrolls. So your major currency pairs are going to be probably a little bit slow this week. And that's always to be expected. So there's probably not going to be too many great opportunities this week. So we may have to just go back into history a little bit and talk about it a little bit more. Yeah, this could be it right here. Okay, so that's 9:25. Basically 12 o'clock candle. Okay. So here's really your ideal situation right here. You got the 4 hour coming through. You can see that we broke through this liquidity line here, this buy liquidity line, and we formed a new expansion dot right here. So this was your first entry opportunity into that downtrend that came out of here, right here. So this is really the ideal opportunity you're looking for to get in the start of a new trend. This would be like that grade A trade opportunity. So this is really, this is the one you really want to pay attention to. Now, when going back to the original question, how do you know when the trend is changing? That's like a super, super popular question, obviously, and that's something that we all want to know because we don't want to take a loss if we're not going to get paid on the trend. What you know when the trend's changing, number one, for risk, you always want to go off of if the red candle changes color on you, goes to green, that's definitely an indication. Number two, you got to look at the last expansion line up here. So right here in this range, between from your entry right here and up here, that's basically the range, the general range that you can get into this trade. Now you're typically not going to nail it on one position. Okay, you gotta expect that you want to have like a few different positions that you can get into, and not just plan on just putting in one trade, but that it's anywhere in the zone that you can get into. Now, if you notice, like the software is very reactive even to previous expansion levels. You see we had these two expansion levels back here, and you can see how this top held within that range. Those can also tell you, when it's a good time to get in, because the boxes and the expansion lines, they all work together to form kind of that's why we talk about it's a map. So, between referencing those points, you'll notice that it'll turn off of those and also that last expansion. And if it's a defined trend, typically you will have a reference point like this. Even if it's a grade A trade opportunity, you're going to have it from some turning point back here where that you can reference, because we're always trying to trade in trend. We're not trying to call the top like this. We're trying to trade in something that's already happening, and we're trying to find a safe entry that is timed out according to the three phases. You got your contraction right here. You got your counter trend expansion, which doesn't always happen, but we're waiting for it to happen to trigger our entry. And then you're looking to get back down through expansion. And when you know it's been a good trade, when you know that the trade is you can count it successful, is when it comes back to this white line, this reference point right here. That's when you can call it was a successful opportunity. Now, how far it gets through the white line is the finesse part. And that's where you get your profit targets. You got your liquidity line here, liquidity line here. Those are potential places you can scale out from the market. You don't have to, but that's where you got to decide how long you want to ride it. Also, your profit targets can be the liquidity lines on your higher time frame. In this case, we had a gap from this liquidity line down to this liquidity line. So that was 57 pips, roughly 58 pips. So that's how you project out how far you want to let it run. And that, like I said, it just takes kind of practice and time to get used to that. So anyway, going back to that question, that's how you know when the trend is changing. Also too, if you're not getting paid on a trade, okay, you sell this trade, and let's say it gets to this expansion line, and it's just kind of bouncing, it's not wanting to break through. Well, the facts are the progression of a successful trade has to get through that expansion. We count it successful when it touches the expansion. We get that initial mean reversion. But in order for it to progress, it has to get through the expansion. So, it may bounce, you may get another move up, it may even take out this high, but ultimately it's still in the zone. So as long as you believe that your higher time frame is going to pay you, it will eventually break that line and you're going to get paid. But the whole point of what we're trying to do is find that safe entry that gets us back to here, because that will put us into the money and let us explore the opportunity. That's the best thing you can do in trading. We can't guarantee how far it's going to run. We're just trying to get in, test an opportunity. If you're doing it right, you can even get paid on these opportunities, and they don't end up even paying. And that comes down to trade placement and making sure that you're able to enter multiple positions, rather than, if you caught it on the first breakout right here and you're just all in for your max comfortable lot size, you could have got a little bit better entry up here if you broke it up. So I always tell people, go into the market expecting to run multiple positions in the same direction. It really just kind of frees you up, and it makes it a lot less stressful. Also too, with that, if you enter the market and let's say it is a full-blown reversal, but you planned on entering multiple positions as it progresses for the entry, if it does full-blown reversal, a lot of those times you'll notice it never comes. It'll be a full-blown reversal, kind of similar to this right here. This was a long trades coming up here. Let's say you thought the market was still going to go long, and right here you entered and you see that it never comes back. That is your indicator that, if it doesn't come back and test that expansion, that trend is pretty much done, at least on this time scale. So at that point, that's why I tell people enter multiple positions, because if you got to find that out, if you're trading a trend to its fullest, you're eventually going to have to pay for that information, and you might as well do it on a lower lot size. And you also want to lot down the further the trend progresses. The further it goes. Eventually, if you see that you've had several opportunities that have paid, you had one here coming up through here, here's one back to this reference point right here. We're still long or still short on the 4 hour, coming back down through there. Here's another one, long, boom, right down there. So like I said, this is you want to have that ability, because the biggest problem I see with people, and I know there's more questions here. I'm going to get to more questions. The biggest problem that people have, they're like, how do I enter? How do I enter the market? How do I enter, and how do I know when to get out? Which is the two greatest questions in Forex. And the real answer is that no one can perfectly gauge the entry. It's almost, I mean, sometimes you'll get it perfectly, but you can't have that expectation that there's a perfect formula for you to enter perfectly. Don't try to pair it with with another indicator, another oscillator to try, like, you're not going to get it. You have to just go in understanding that this is the directional bias. And as long as that holds, that these trades are going to come back to the reference point and put you into the money. That's it. That's the very, very basics of what we're trying to do. And then, for instance, this one pulled up. It did bypass this last expansion, but you could see that this expansion is kind of that picture perfect expansion happening starting from this box. Here's your leg up, here's your leg down, here's your leg back up. So if you look at this grouping as a whole right here, and that's how you have to start to look at it, you can see what's going on, and you can formulate where it possibly could go, paying attention to that overall master pattern. So this one, if you had this trade right here, obviously you're short on the 4 hour still. It pulled up, you probably would have entered right here. And then it would have pushed up, you could have entered again right here. And as long as that 4 hour stayed intact, it's coming back to this line right here. That's it, because this was your original reference point, right? So that's really how you have to approach the entries, and then hopefully that helps in knowing when to exit. And I'm not going to lie, it takes some practice. It takes some screen time to know what's going on, and it really ultimately comes down to you understanding where your higher time frame is headed. If you don't have faith in the 4 hour continuing in that direction, you need to ask yourself, is this trade I really want to be involved with? Because it all comes down to, you're trading the 4 hour. You're not, you're trading the 15-minute too, but your trade is really the 4 hour. So, you got to really ask yourself, where do I think that 4 hour is headed? Then that's going to make you have a lot more confidence to stick these entries. Let me find another question here. So there's been about 40 questions that came in since I started that rant. So give me a minute here to kind of catch up. Hang on. Okay, question from Doug. This is a quick one. Doug's been with me a long time. Good to see you on, Doug. Do I like having 3 windows open? Are you talking about the chart, Doug? If you're still there, you might have wrote that a while ago. Sorry. Okay, there you go. So yeah, I like having 3 charts up. What the methodology that we teach, the basic methodology in the online course, is to have 2 setups, and that's because that's the bare minimum. What I don't want is, I don't want people on the software trading like this. You could do it to some degree, but you get a much better understanding of where the markets are headed if you're looking at the cycles on a higher time frame. So it starts out with 2 time frames, but I like to reinforce because ultimately my trade, let's say if it's a 15 into the 4 hour, my trade is that 4 hour chart, and I'm going to feel even better about the 4 hour chart if I know where the weekly's headed, right? So in this case, we could see the weekly's clearly trending short on euro dollar, clearly. So what that tells me is that when I get a move like this on the 4 hour going up, I'm really not going to pay that much attention to that, because that really is just an entry into the weekly. So I'm going to pay much more attention to to the price going short under expansion on the 4-hour, and I'm going to have much more faith in that. And as you can see in this situation, that's where you get paid on these trades. That's in those runs right here, bam, bam. That's what we're trying to do. We're trying to get that alignment. So like Doug just said, if your CAD, like your dollar CAD right now, is in a box, let's take a look at this real quick. Right there, that's a market you don't want to trade. Why? Because it's in a box on the weekly. We got a comment a little bit ago. I'll touch on this real quick. They said the comments, I don't see how your software shows the market phases. And I don't really understand when people say that question, because all this is about is the 3 market phases. And I think people think that every time they get a box, they're going to get an idealized situation of what the picture perfect 3 market phases is going to look like. But it doesn't always happen. Sometimes it can happen on a bigger cycle. If you look at the weekly, what it's telling us is that the market's in contraction. The definition of expansion is when you leave that contraction box. That's the definition. It doesn't have to go back and forth. It does not have to do that. And if it doesn't do that, that means that it's probably doing that on a larger time frame if it just breaks out. That's where you have to look at that. So for instance, right here, here's your master phase right here. If you look back, you'll normally be able to spot it. Here's the box, and oops, there you go. Alerts coming through. Okay, so here's the back of the box right here, right? And it's coming down, it swings back up, and right now it's holding above or within that average price of that last box. So if you want to find the idealized visual of that master phase outlined in the YouTube video, which everyone's seen by now, then you have to look back a little bit. It's not always going to happen right on your exact box, but that's the way you want to work with these boxes. Is you want to understand this area as a whole on whatever time frame you're trading, and that'll understand how you're able to treat the real time. It's a combination between real time and looking back a little bit to see what makes sense that's going to unfold. So hopefully that makes sense. So anyway, go back to Doug's question. Yeah, I like looking at 3 time frames because I like to reinforce my initial trending time frame with an even bigger time frame, because then it tells me which runs to pay attention to even more on my midterm time frame. Okay, so let's take a look at something else here and we'll get to some more questions. So I know a lot of you guys trade pound Aussie. Let's take a look at that. So right now, if you look at pound Aussie, that's your setup. What's happening right now? And if you're running ATS Assistant, you probably would have got a grade B alert right now, about 15 minutes ago when we popped out short on, on this box. Now, if you're going to enter this trade, excuse me, I've been fighting a cough lately too, so I apologize. I'm a little bit hacking up here. If you're going to get in a trade like this, number one, I wouldn't. Why wouldn't I get into a trade right here? Because we are basically done with the high volume times, and on a 15-minute chart, this thing's going to just swim sideways on you. So I do get emails from people. They say, I got the last 3 trades I took all went sideways on me, or the last 5 trades. First question I ask them, what time frame are you trading for your entry, and what times of the day are you trading? And they say, well, I'm trading a 15-minute chart and I'm trading Asian session on euro dollar or something. It's like, okay, you're not even trading an Asian pair. Now I know pound Aussie is part of that, but still in general, these things, this one is the best. If you absolutely have to trade in Asia, pound Aussie is the best. But in general, a lot of, especially for anything associated with the dollar, you want to stay away during Asia. I don't care if it's the best looking setup. A lot of those trades are going to go flat on you. You want to trade, you want to find setups in the midst of the London, New York session. If you're trading a 15 into a 4 hour, it's not going to matter as much if you're trading like a 4 hour into the weekly, into the monthly for longer term trades. But for daily trades, you're getting in on the 15, expecting to get paid on the 15, then you better have a forecast of 4 or 5 hours ahead of that trade that it can pay you. Otherwise, you're going to go into the flat Asian markets and probably eventually get manipulated out of the trade, or you're not going to be in that strong of a position. So let me catch up on some questions here. Give me a minute. Just to let you guys know, if you have any questions on here that are related to mechanical things about ATS Assistant or how it works or how to set it up or anything like that, those are things you're going to have to email to support@tradeats.com. Something where we're not going to spend time on the webinar talking about. Let me get a drink of water. Talking about how to turn on ATS Assistant. So make sure that you talk to support on those ones. Okay, here's a good question. The subscriber, they like to trade on the 5-minute chart for entry. So if you're trading the 5-minute, what's a good supporting time frame for the 5-minute? Oh wow. So on the 5-minute, you could use the hour or the 4 hour, and you go back and forth between the two. The 4 hour and the 1 hour are going to be good to capture the overall activity of the London, New York sessions. Anything higher than that is going to get a little bit too far apart, but I would stick to the 1 hour or the 4 hour. Even the 5 into the 4 hour is a decent setup. So as you can see, that right now, if you look at pound Aussie on the 5 and then pound Aussie on the 15, it's showing you the same information. You see that? We're below expansion on the 15, looking for an initial, like I said, I wouldn't be in this trade, but just for learning purposes, if you did pull this, you can see it's holding this previous expansion level, which is a good sign. And you're initially looking to just get up to this reference point, and you could measure it out. This is your expectation. You got about 15 pips there, not very much. But that's to put you into the money with the expectation we're going to get through that level and then continue to head up. So, but on the 15 and the 5-minute, you can see it's showing you the same thing. The 5 minutes, the same trade. All the 5 is just going to be a little bit faster to give you information. But look at it. It's holding the previous expansion back here, which is even representative of the one on the 15. And you're looking if you're in this trade, you're looking to rip long, and you could get in anywhere here, and you're looking to get back to here initially and put you into the money. And then now that you're in the money on that trade, you got a safe entry, then you're just looking to see how it progresses. When you get up through that white expansion line, then if you want to, you can move your stop loss up, up to the expansion, and you can just let it run. Here's the profit targets right here. Here's one profit target on this liquidity line. Here's another 2 up here, and that's it. Another question I got was, how do you use the IREG? The IREG, if you guys don't know what it is, it's these 3 lines right here. It's basically just a simple regression channel. The reason I have this on, we had guys that traded with me and were part of a group I was part of a long time ago. We had a similar indicator to that. We used to call it the COG, or center of gravity. I put that in there just because I knew some of them like to use it. We use it a long time, and what it does, it just generally shows you like the highs and lows of the overall move. So, I mean, for instance, you could see like this, below the blue line in the middle here is a buy zone, above is a sell zone, and just kind of shows you a general, just a general buy and sell area. That's pretty much it. But I will tell you, it's not as accurate as ATS lines. It's just like something just in general to show you the slope of the trend if you want it. I always tell people, if it confuses you, just delete it, because it's not needed. It's not our code. I didn't write the code for that. There's other things out there that are just like it. That's why we don't license it. You notice it takes no license keys. The spread indicator and the timing indicator down in the right corner do not have license keys because they are not ours. It's just something that we put in the package because we feel that they're useful. Other than that, that's it. Okay, got some more questions here. Hang on, let me catch up on some reading here. Okay, a couple of good questions. Looks like from the same person here. Two questions I want to touch on. I think they're good. I'm going to answer the simple one first. What about using a moving average on top of this? Okay, I'm not a big proponent for combining ATS with any other indicators, because if you add one, then you add 10 is what I've found. And it just turns into a confusing pile of mess, and you're not able to understand what's going on. But just for kicks, I'm gonna go ahead. I'm gonna throw on a moving average right now on this 5-minute chart, and I'll tell you what it seems to be good for if you want to do that, but I don't really recommend it. So I'm gonna throw on just like a 50 period. I'll just leave it white. Okay. 50 periods actually too tight. So where a moving average, if you absolutely can't let go of the moving average, then you could put it on a setting where it shows how loose it is, and it's still the same thing. The moving average is just representative of an average of a higher time frame. And we're doing the same thing by looking at the higher time frames. So for instance, like we came below the moving average here, you had a counter trend pullback, and then same thing. But you probably would have seen that same opportunity possibly, looking at a higher time frame. But overall, I find that looking at the higher time frames is a better representation of what cycle that time frame is in, and also just understanding more where the market's headed. Whereas this, you're just literally trading off that line. And if the setting doesn't work, then you're constantly trying to find, okay, what's the best setting? Because right now, this is a good entry, but it's below the moving average. What does that mean? Well, I could just change it to, maybe a 150. Okay, now it's a good trade, right? And that's a problem with other systems. That's a problem with every other system out there, is that they have settings. And I know that a lot of you guys want this exact specific, how do I get in? How do I get out? What's my stop loss? What's my take profit? What's the exact rules so I don't have to think about the market or do anything? And it's not going to happen, to get a perfect thing with settings, because the market doesn't operate with settings that way. It doesn't. The closest thing you're going to get to predictable behavior is ATS. It's boxes, it's expansion, it's liquidity lines. The formulas never change. I can't change them, even if I wanted to. So I'll show you guys. This is the back end of the ATS indicator. You guys can't see all this, but that's it. Mine, granted, I can change some colors, but there's no settings. I can't change what it looks like. I can't make it conform to a market. That's it. So what you're trying to get is a stable platform for you to base your decisions on, and something that reacts the exact same way. It doesn't repaint, it doesn't change, and it's a reliable platform for you to build your skill set on, that gives meaningful information. That's really all it is. So adding other indicators and doing things like that, I don't recommend it, because you're adding a variable to what we're doing that's going to cause you to have to think about, what do I change? What setting do I put it on? What's the best way to trade it? So that's my viewpoint on that. You guys are grown people. You could do whatever you want, but you know how I feel about it. All right, I just deleted my chart. Or did I? All right, so let me open a new chart. Okay. So let me scan through some more questions here. Oh, I had another question there. Let me catch up here for a second. Okay, so just talking about trading on bigger time frames, I'll touch on this briefly. If you're looking to trade, if you cannot trade during London and New York sessions, then a really good setup is going to be this right here. If you're trying to work a job or doing something else where you can't babysit the screen all the time, this is what I'd recommend. Right there, that screen. Right now, you can see we had a short pullback. Now I do think that on the 4-hour on pound Aussie, this particular pair, it did pull this candle red possibly. Which if you get a red weekly candle, let's say if you're, because we're doing the same thing. It doesn't matter what time frame you're trading on. We're doing the same thing. We're looking for a counter trend pullback and a reversion back to that initial reference point. You can see the weekly is long here. The monthly is clearly long. So this trade, there was no, this definitely, as long as that monthly holds and that weekly holds, the further you pull away from this reference point, the bigger the trade coming back. You can see it came down. It held above this last reference point here, this last expansion line. And so your initial trade was coming back to this line right here. So from top or from bottom to where we're at now is 200 or roughly 260 some pips, right? So this is a great setup. If you want to trade longer term time frames, this is what I'd recommend. You can also, if you want to go a little bit faster, you can change the 4-hour to a 1-hour as well. But I find, if you're trying to fit this into your life with a number of other things, or you're working another job, you got to look at it this way. You're going to have to, whatever you're using for an entry time frame chart, you're going to have to look at the screen that often. So if you're looking at a 15-minute chart, you're going to have to look at the chart every 15 minutes. So if you're trading a 15-minute chart and you're trying to figure out, how to do that while you're working a job, maybe you enter the trade on our software on MT4, and then you monitor it on your phone while you're going to work, you're going to be a really inefficient, ineffective trader. It's just not reasonable to try to do that. So if you're going to trade a 15-minute, you need to make sure that you can see your way through the entire session and that you can be there Monday through Friday for the most part. Because there's also, when you're trading the lower time frames, there is no guarantee that that day is going to be a good paying day. It might not be a trending day. So at that point, those days, we're just trying to break even. You can't be profitable every single day. You got to look at it by the week, by the month, by the year. So when you're trading a situation like this, or with a 4-hour into the weekly and into the monthly, then you only got to look at that chart every 4 hours or so. So in this type of situation, we're long on the weekly, we're long on the monthly. You definitely want to go in the monthly direction. And, you're basically, you pull a trade down here. It goes down, breaks this low. Maybe you put it in another position down here. And when it breaks that low, you put it in again. But basically what your general reference point is the weekly range, of that weekly candle, and looking from between this expansion and this previous expansion in this general range right here. And it could go even through this. It may even take the liquidity lines out down here. And in that case, I'd maybe even enter again. But if you're trading this big of a time frame, the worst thing you could do, because so much can happen in the course of 4 hours, is to put in all of your position on one price. If you pulled your entire trade right here when you first got out of the box, then yeah, you're still going to come back up and get put into the money, but you could have cost averaged your way into this entire thing. And more times than not, you're not going to get it perfect on the entry. So in a situation like this, I would take your max position size and I would break it into 10. I would break it into 10 pieces, and then plan on putting in a trade as you build it. It's called building a position. You're essentially building a short-term long portfolio in the direction of the weekly and the monthly chart. That's what you're doing, and cost averaging your way in into that overall fundamental direction. And in this case, like someone would say, or may ask, well, what about this? And then we break out of this box. I would have averaged all the way down this if I was trading pound Aussie, and I probably would have even maybe put in a trade when I broke out of this box. And people say, well, that's breaking out of the box. Why would you trade? Why would you do that? Why would you jump in right there? Because my original reference point is over here. I'm still under that original expansion. That's where I started the sequence, if that makes sense. So right now, if you were in the progression of this trade, you'd see it's breaking long. We're starting to hold under this expansion right here. That's an indicator too. You got to look at that, right? You got to think, if you cost average your way down through this, we broke out long. As of right now, I would be looking at that we're going to hold above this expansion. This is a new piece of architecture we have to work with, real-time information. We're going to hold above this expansion. And that we're going to, eventually build up through this expansion line here would be my initial analysis right now. Does that have to happen? No, it doesn't have to happen. But, if you entered right, you should be at a pretty safe overall average, probably be in the money to some degree at least. And now you understand what the parameters are of managing this trade through. And as long as it holds, as long as that weekly holds green, you see the monthly's green, good chance you're going to work up through there. And then once the price does break through that expansion line, you got profit targets here and you got profit targets up here. You just got to decide how long you want to run it. And that is something that, I can't tell you how far it's going to run. All we're trying to do is put you safely into the money. When we talk about a 90% win rate, that's what we mean. Getting you safely into the money. Now, a lot of people will watch a trade come through and they will watch a situation like this. They'll get in the money and they'll see it's not progressing. Let's say it just tries to test this, and let's say now it's breaking short. Next thing you know, you're through this line right here, and it's headed short. Your weekly's turning red, and they hang on to it, and they say this doesn't work. No, it worked fine. It told you in real time the trend was not progressing. If it starts holding expansions at the top of that, and it's not going, then pretty much a reversal is probably forming. So, you have to take those clues in real time. That's what this is all about. And that's what we talk about when people, we want you to give it, a month, not just a month. We want you to give it 3 months because you have to get experience watching that. You have to build a feel with that. And then with that being said, I'll mention on this real quick too, is that you'll really only want to trade no more than like 1 or 2 pairs. I know some of you guys, if you've gotten a coaching call with me already, part of what I ask is, what are you trading? And what time frames are you trading on? And they say, well, I'm monitoring 28 different pairs or 25 different pairs, and I got ATS Assistant running on all of them. I'm going to say, that's a lot of action. That was a heck of a lot of action you got going on there. You're going to get, especially if you're running the assistant on that many things, you're going to get so many signals that are all good criteria signals, but you're not going to be able to drill down on any one of them. You get one signal, and then you get another one right after that you like better, and then you may get one that you even like better than that. So the best thing to do is drill down on 1 or 2 pairs and be there through the cycles. You want to be there when the higher time frames begin to pay and get in those trending phases, because that's where you're really gonna make your money for for the weeks, for the month. So anyway, hopefully that answers the question about trading long time frames. We're not doing anything different, whether you're doing it on a 1-minute chart or you're doing it on a weekly or monthly chart. We're doing the same thing. It's counter trend liquidity coming into the market. We're looking for an initial mean reversion back to that initial reference point to start the trade. And if it goes really well, we're looking to get above that and ride it. If you don't think it happens, go back and study your charts. Go back and study them and build faith in the concept. And be prepared to layer in some positions. Don't go all in with one position at 500 to 1 leverage. That's stupid, and you're on your way to blowing up. Okay, let me catch up on some more questions here. Bear with me for a second. Okay, good question from Shy. Excuse me. Question is, sometimes the 4 hour is still green, but the price is at the bottom of the candle. How do we treat that? Okay, so for instance, I'll show you, even on the weekly, it holds true. Let's say that this candle right here on this, I wasn't watching this when it happened, but let's say you're entering this trade and all of a sudden, you know, this price is working down the candle right now. And let's say next thing you know, it's red, right? Well, number one thing that I like to know is that's why I like to back it up with one more supporting time frame. I like to know the probability that this move is going to. What I want to know is if whether you're trading a 4 hour or a weekly for your initial supporting time frame. The question is, by the time this 4 hours or this week is over, is that candle going to still be green? That's a question you got to ask before you take every trade, because if it is, then most likely any position you enter below your expansion on the lower time frame is going to put you into the money. So it's a process of elimination as far as questions. Do I think that's going to happen? But in certain cases, it will flash, or maybe it's still the same color, but you're down here. That's where you get the best entries. That's where people start seeing that they're seeing. Remember, other traders who have their moving average on. Let me put this on just for kicks again. The moving average is kind of the purest thing you could put on there when it comes to an automated technical analysis tool. So I don't mean to hate on moving averages so much, but it's just easy to. I mean, they could, you know, in this situation, they look good. I mean, it's like, okay, crossed over here, and look, I just ride it and go back and forth. But you guys know when the market goes sideways, you're going to get beat to death. But for instance, what we're doing with ATS, people who are trading traditional systems, they see this crossover, they see it holding, and they start building faith in a downtrend or a reversal. So what we're doing, you know, is we're taking the other side of their trend. When they are riding these average prices, whatever the setting is, if they have it on this, they're starting to short the market, especially on a spike like this. You know, they're jumping in short on that because it's building their belief. But we're getting backed up with that higher time frame, and we're seeing the wide cycle. We're seeing the box. We're seeing that it held, the price settled. Remember we talked about on the video, price settles above that expansion line, and now it's rotating long. We see that that's happened on the weekly chart. We're seeing those three market phases play out, right? And so it's settled there, which gives us that inside information to take the opposite side of these people. Anyone who's selling under this moving average, they're like, I'm going to sell. Are you willing to buy from me? Yep, I'm willing to buy. Okay, I'll do it right here. Oh, it's going down again. I'm willing to sell again. Okay, I'll take that too. Thank you. I'll take that trade. And then they sell again. Okay, yeah, thank you, because I'm looking at this. We're looking at the architecture of the market. And I know that anyone that's sold down through here, their comfort zone is going to be right up here at this liquidity line. If you sell right here, you may go a little negative, but when it gets above here and starts breaking that high, they're getting blown out. They're going to say, forget it. It wasn't what I thought it was. The trend's still long. And then they're going to jump in long up here. We're always trading with other people. Not directly. I know we're not doing it directly. We don't know who we're on the other side with. We don't have that information. But when it comes to analysis, we're doing the opposite all the time of what's traditionally taught. So, and we're just doing it in trend with a higher time frame. So, anyway, I went on a little rant there, but that's all we're doing. They're seeing that as a short. We see that as a long because we're long over here, and we see that inside this overall architecture right here, this is where we're working within. We see that range, and we know that we're going to at least get back up because you see anyone that entered short right here, even if this does turn into a short trend right here and goes down, they're getting blown out. Anyone that entered, or they say, I'm going to sell on this pullback. I'm going to sell on this pullback. Well, they're getting blown out even by this move. So anyway, hopefully that explains it a little bit better. So let me catch up on a few questions, guys. Hang on real quick. I'm gonna get a drink of water. I'll be right back. Hang on. Okay, I'm gonna answer a quick technical question, just because it's an easy one. How many candles should we have set in the MT4 chart setting to have? So basically, what kind of history should we show um, on your guys' indicator? It'll be right here, max history bars. We normally just set it at 2000. You can set it to more, but this indicator is super data heavy. And so we did that so it didn't load too much, because you'll notice the more you load, the longer it takes to change time frames. And if you scale back, it kind of freezes up because there's so much data that goes into running all these lines in the calculations. So you can play around with it, and if it gets too slow, then just take it up to a lower amount. Anyway, just want to cover that real quick. Give me a sec. I'm gonna keep catching up on some questions here and figure out what I want to talk about next. Hold on. Okay, another quick technical question. Like I said, any technical stuff you really want to send to support at Trade ATS, but um, just a quick mention on the dashboard. Number one, dashboard is not the assistant. A lot of people think the dashboard is the ATS assistant. The ATS assistant is a separate download, separate installation video in the bottom of the online course. So you can check that out if you haven't already. Dashboard, this code I wrote a long time ago. And we just put it up there just to make a quick reference point for margin and pip value and all that. But the code has gotten outdated a little bit, and on some systems, for whatever reason, it freezes up. And also, like some screen resolutions, it gets kind of squished together. We're gonna remake it here probably soon. But anyway, if it's confusing, just delete it. You actually don't need it. You can manage all your trades just from the regular terminal that way. But anyway, if you're having any problems with it, just delete it. Like I said, we're working on a remake from it. It will probably come out on the next update pretty soon. But anyway, if it is frozen on you and you're because if you want to remove it, you just right click on the chart, go to Expert Advisors if it's on there, and then just go to Remove. If it's stuck on there and it's frozen, you just have to delete the chart and just rebuild a chart. Like I said, it got glitchy over time, I think, with different MetaTrader 4 updates and stuff. And anyway, it's a pain, but yeah, that's all I can say about that. Okay, let me keep reading here. Hang on. Okay, good question about a 1 minute chart. Everyone loves to talk about the 1 minute chart. Let me delete this again. All right, if you want to go in and get chopped up on the 1 minute chart, this is how you do it. So the 1 minute chart, you can trade it. I'm not going to lie, you can trade it, but you got to be really careful because the problem with the 1 minute chart, number one, if you're going to trade it, I would trade it like into the hour because you really need a stable time frame to back you up on it. So I would trade one into the hour. We used to trade one into the 15 back, but the markets get so volatile in session that even the 15 can whip around on you. You really remember the supporting time frame is all about stability. You want a supporting time frame that you can understand because that gives you confidence on the short time frame. If you don't understand your supporting time frame, whatever it is, and you don't have a feel for where it's headed, move on or don't trade. You got to wait till you feel good, till you get that kind of that sense of knowing that comes into you. You're like, okay, I see where the hour's headed. I see where the 4 hours headed. I see where the weekly's headed. And I feel good about that. Now I just need to drill down my entry. So right now you can see right now on the pound Aussie, hours short, we're above expansion. There's a good chance we'll come back and hit this expansion, but why would I not take this trade? Simple, we're in the box on the hour. So there's a good chance we could just range back up into here and just go sideways. So I'm not touching this. But that would be, if you're gonna trade the 1 hour, you can trade into the hour. Now the problem with the 1 minute is a spread. Because a lot of your trades, you're going to see a lot of action on the 1 minute, a lot of ups and downs, a lot to deal with mentally watching that play out. So you got to make a lot of decisions really fast. And if your spread, let's say your average trade you're going to take is say 10, 15 pips, and you got it roughly on average a 2 pip spread. You're talking about like, over a 20% disadvantage every time you open a trade for your average trade that you take. So, I mean, that's a pretty big hurdle to overcome. 20% every time you open a trade, you got to make just to break even. So, something like gold right now, we've actually been playing around with gold on a 1 minute chart. And it's just because it is so extremely volatile. If you look at gold, I mean, right now you could see even this is somewhat of a high spread. It's on a demo account right now, obviously, but you see how tight your spread is. So when you get moves like this, if you're trading into the 1 hour, this is a situation where you could get away with trading the 1 minute chart just because the market's so volatile and you got an awesome spread on gold right now overall. I mean, look at these trades. I mean, right here, down, boom, right back up. And then this one held above, boom, into that run. Right here again, all the way down. And the hour never changed through all this. All morning you've been long. So yeah, you definitely could have ripped your way in and out of gold all morning on the 1 minute and crushed it. And the hours above expansion right now it's floundering out. And why is it floundering out? Well, look at, we're at a stop point right here, previous liquidity line level. So you can get pauses in the market at those levels. So your gap was when you got above right here, broke this previous liquidity line, held above expansion, and that was down here. So there you go, trade after trade after trade. Every single one below expansion paid you, as long as the 1 hour held. You got a situation like this right here, and this can happen if you're, because right here, this is good. Let's talk about this for a second. Right here, we had this breakout right here, which put the market into this up move right here. This was on this candle right here on the hour, right? So this put this up into the market. This was your first, this would have been probably your grade A entry opportunity right here. Would have popped on this expansion line. You would have got the grade A signal. Now, one thing you got, and this is why I tell people with the signals, you have to understand how to trade the market first before you just follow the buy and sell signals on the assistant. You have to know how to weight them. In this situation, we were just coming through this liquidity line. It was the very first candle on a new expansion. And remember, ideally, we like to see price settle. Doesn't mean you couldn't have ripped along right here. It still came around and paid you, obviously. But these are things you need to weigh out that take finesse. They take time to learn. When it breaks out long right here, if you would have entered on that grade A opportunity, you can see that it actually came up. It tested expansion right here on those couple of minutes, came down, came through this liquidity, and then we had a down run. Okay, during this whole time, even on that, we're still holding above this expansion. So, and your supporting time frame, which is the whole point of a supporting time frame, is holding stable to the long side. So going off of this original reference point, you could have bought again right here and still traded back up to this level. These were just, again, better entries to get in. So, you know, that's something like the 1 minute's going to give you a lot of action that way. So I know even on the 1 minute, you kind of just want to enter, you know, your bigger, the whole idea of trading a 1 minute is you're going to trade higher leverage and make, you know, bigger or make bigger money on smaller moves. I get that. I totally get it. But you got to be prepared, because in this situation, honestly, if I was trading this, I'll tell you right now, I probably would have bought in here. And then when I saw this right here and I saw this liquidity line take out, I'm getting out right here. I probably would have taken a loss from here to there. As this ran down, I would have seen how far it ran down. If it went below the expansion on the 1 hour, and I probably would have bought this breakout right here, because I know I'm still, my overall reference point is still this top expansion. So that's what I would have done. I definitely would have taken a loss on that. So, but it would have been insignificant, because what I wouldn't want to do is I don't want to ride in a reversal on the 1 hour. I would let it build some more. So anyway, so hopefully that kind of explains, you know, how to trade a 1 minute chart. Yeah, you can do it. Make sure it's something that has a really, really small spread. And I would hope that you are a pretty experienced trader, and you're not like, if you're like, you know, this is your first month trading, don't trade a 1 minute chart. Don't trade anything lower than a 5 or a 15-minute chart, just so you can go slow and learn how to make the decisions you need to make. Okay. I know Doug's trading gold. He said he bailed out there too. See, Doug knows what I'm talking about. All right. So let me catch up on some reading here. Hang on. Give me a minute. Hey Simon, I see your question about AUD NZD. Can you just I'll try to get to that just in the future questions. Can you let me know what time frame you're trading on? Because then I can pull up the right info on that. In the meantime, we'll see. Let's see here. From Mark, I was watching the Aussie CAD monthly, weekly, 4 hour. Can you bring that up? Discuss how you would have traded it over the past few days. Absolutely. Aussie CAD. Let me look that up. Oops. Four hour there. Okay. All right. See, this is a trending pair. This is what I'm talking about. And this just might be the trade idea of the week, Mark. So thanks for bringing us into this one. All right. So what do I see? Let's start with the monthly. Do I think that monthly is going to end this month red? I'd say there's over a 50-50 shot that happens. Why? We're pulling below expansion. You can see we got I hate candle names. I hate candle patterns, but for lack of a better term, I'm going to call this a doji right here. And It's going down here. And so we had a pause in the market and now it's pushing again. So, if we get another series of 2-3 months like we did out of the box here, then yeah, we're headed short. What I love again, weekly's aligned under expansion. So we know the masses of traders, their moving averages, everything's pointing down. They're definitely willing to sell. They're willing to sell this market. Okay. Now, what do we got in the short term? We got probably, for lack of a better term, a bunch of people that are suckers getting suckered into an opposite trend right now. So what does this look like to me? This looks like a sell. Someone said that I need to make a decision on this chart right now, trading the 4-hour into the weekly into the monthly. This is time. It's time to start building short position on this trade. Absolutely. Now, is there a guarantee it's going to pay? No, nothing is guaranteed, but you got a lot of probability in your favor. What I see right now, just looking back at this, let's go back a few expansions here and figure out what's going on. We're crawling down. We did have an entry right here. This was just coming out of this turn on the weekly right here. So there was an entry, came down, held through expansion. So, I mean, that was ideally the opportunity, but let's say that it was still green when that happened, which it very well may have been. Well, or not. Let me see real quick. This is a 922. Oh, no, that was it, man. That was your grade A opportunity right there. Boom. Right out of that box, you would have got got the notification, grade A. So you got through there, then you've earned the right to be in this trade from up there, and you could just ride the weekly at that point if you want to. But right now, this is a grade B opportunity right here. There is no opportunity right here, really. You can see that we broke out through the box, and it's held under that expansion. You could have maybe traded off expansion, but those are really fast trades. Realistically, you're probably not going to get those. Right now, it's time to start building a position. If you're feeling good about the weekly and the monthly, right now, sell. If you hadn't already sold, you maybe would have sold some when you initially got the expansion in this first candle. We're in the second candle right now. Probably build a position in this. The way it's looking, honestly, I would probably be willing to take it up to these liquidity lines up here. And then what I would do is I'd put on some here, some maybe at the white line here, and then probably a little more at these liquidity line levels right here. And I probably wouldn't go above these last expansions back here. I feel like that's kind of the manipulation point. And what do you got to look for is like what you got to kind of paint forward in your brain your worst case scenario, which would be this weekly turning green. And if this weekly turns green, we're probably headed for this active high up here on the weekly. That's probably what's going to happen. So in that situation, you got to look at like what does price got to look like on this to make that unconfirm my trade? What's it got to look like? So looking up through here, that's I would say in this range would be my probably above right here. If it gets into this neighborhood, my weekly's probably turning on me, and it's not what I thought it was. So I would layer in according to that. But you got good probabilities on your side. You stick to setups like this. Obviously you had weeks and weeks and weeks. Now, one thing you do got to keep in mind, yeah, the monthly's holding, but you could get a pause on that weekly. So one thing you do got to keep in mind is that we have had a few legs down on the week. So in this case, the way I like to do it is I like to manage my equity based on how far the trend has gone. So in a situation like this, I wouldn't get as excited about trading this one as I would trading this candle right here, where you got a weekly break short, green goes up, you turn red, you're settling again under average price. Love it. Right up here. In fact, let's go see if we can find that. Let's go find this opportunity. 6.2. All right. So let's go back to 6.2. I think I went back too far. Okay. I went back way too far. Okay. Okay, so here, yeah, okay, so here is a weekly in the box right here. So you can see all this movement is weekly in the box. This is like when the weekly goes in the box, sometimes you just want to take those weeks off if you're trading this way. You get a weekly in a box, it's just like, wait till you get a breakout, you get the volatility signal of the breakout. that basically tells you this market's about to move, time to get to work. So, okay, we got this, it's moving down. So let's find our first entry opportunity. Got 6.2 right here was a turn. This is 6.18, 6.5. Okay, so it was coming out of here. Okay, so this one was difficult to enter. Not going to lie on that one. This one was difficult because this literally was the top of that turn right here on that weekly. This was green at the opening of that week. And if you were trading this weekly when it opened, you might have pulled a trade long right here, trying to trade it back to expansion. But that's why I don't like to trade those mean reversion on your higher time frame. We want to get it pulling away because it's more likely to trend pulling away. This is where people are willing to jump in on that market on the higher time frame. So we're trying to always trade with the crowd, not against it. So right here, you probably would have missed this. Your first entry opportunity was right here on that 4 hour, right there. And that's where you would have started trading the sequence. But in a situation, going back to what I was saying, I'd be much more excited about this because it's much closer to the expansion point right here. Whereas something that's down here, don't get me wrong, I'd still trade it. I love what's happening, but like this opportunity rotation on the weekly, this one right here, I like those better. I do like those better. But one thing you don't want, it's like at the same time, like a trend will eventually stop on all time frames. It'll eventually turn. We're trying to trade as much as we can out of it as we can. But going back to the whole grade A trade time frame concept, the magic about the grade A trade in all of its forms is the timing. That's where if you're right, it doesn't mean that the grade A trade can range out on you. But when you're right on those types of trades and you build a position and you're there to see some of those great opportunities, you can go really heavy on those positions. And you're at the start. It's all about timing. You know, as traders, we don't get paid to say what happened already. You know, we got to be there and navigate the moment. You have to be at the moment. And that's really what that's all about, is trying to stick a good entry in those types of situations. So the grade B, the longer the grade Bs go, you know, and you get multiple legs, not that we're counting legs. I know some people think, well, this is 3 legs down, or I see 4 legs down. I don't care how many legs. I don't count any of that. I don't count Elliott waves. I don't count any. I look at price action headed down, price action headed up. Who am I trading with? How am I going to get a good entry? That's all I care about. So in a situation like this, going back, I think it's a good sell opportunity. Would I go heavy on it? Looking now, doing this analysis, probably wouldn't go super heavy. So, you know, I would take, you know, a handful of positions at an even smaller position size, and I would trade it, you know, to get something out of it. But I wouldn't like it as much as I love it up here. I love the way the entry looks, though. I love the way it looks. I love how it's spiking up. Yeah, it feels great. Feels really good. But that being said, eventually this weekly is going to turn. And when you're trading this way, your worst case scenario is seeing those green weekly candles in a short market. So you got to think about what's going to happen, and you got to prepare for that. And you got to be ready to make those decisions. Because when you're trading this way, your paydays are going to be when you get those new expansions like this right here. You're talking about, got a new expansion line on this candle right here. So you could start trading short right here. You got a good amount of short weeks. You're probably taking a loss on this turn. You got a new red right here, confirms. First new leg under that expansion. Beautiful. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 weeks that you had to sell. 16. Let's go, let me see if I can get back that far in the 4 hours, 624. Okay, I can't get all the way in it because I'll have to update my, well, let me see. Because this is good stuff. Hopefully, like, I kind of geek out on this stuff a little bit, but hopefully you guys are bearing with me here. I apologize if I haven't gotten to some of your questions too, but we're going to do these webinars every week, so I'm sure I'm sure you guys will get it. Okay, so we got some more data there. Okay, so this was beautiful right here. These are these runs right here are what this is what makes your year. Okay, this is where you become a trader, is being there for these types of things and not getting sidetracked. So that was 624. Right here, 620. So here's your rotation, sideways, boom. Okay, probably grade A entry opportunity right in here on this leg, right here. That was the start of it. Look, which white line that you sold against didn't pay. When you're early to those rotations in those moves, you're not getting excited down here. You're getting excited up here. Sell, mean reversion to the white line. Sell, mean revert. Let me get in closer just so we could really drill down. Build a position, get paid back to the white line. Build a position, get paid. Build a position, get paid. Build a position, get paid. This one holds below the white line. Remember, we're just trying to get back. We're trying to make money at least to the white line. This one holds, goes into a run. You're probably not going to get all of it. You may even close out, but the fact you're getting a safe entry, you understand what's happening over here, that's all we're trying to do. Boom, get paid again. Get paid again. This one turned into a massive run. Get paid again. Build a position, coming back to your reference point down here. Paid again. Build a position. This one took you on a little bit longer of a ride, but if your weekly's still intact, you're good to go. That was your range too. If you look at this particular opportunity, you started building a position right here. Remember, going back up, referencing these last expansion levels over here, you see we ended up getting a spike to this top one. So you got to be prepared to cover that range when you're layering into that trade. But look at that monster. And then you finally got your reversal. That was that big spike down here. Now let's talk about the reversal right here in the week. 10-7. Okay, so week of 10-7 right here. And look at this right here. If you're trading in here, you can see that your last expansion line, well, your reference point is still down here, right? So you're eventually trying to trade back if you were still riding this trend, even after all this time. This is fine. You've made a lot of money in this trend, a lot of pips there. You could afford to give some back to find a turn. It's okay. So, but trading again above these expansions right here, if you pulled a trade right here, you got to realize too, one thing is that you may want to be a little careful and not give it so much rope, because your range is now this big. You're talking about a 283 pip range back to that last expansion. You know, that's a big range to cover to find out if that candle's going to turn green. So those are things you got to take into consideration. I'm not saying don't trade it, but in this situation, again, how many weeks have you got paid? You're going through these previous liquidity line levels. Look, it had one right here. It took that pause, had another one. That was a return. That was a rotation. So you had this entire gap down to book pips. Eventually, you're going to lose. Eventually, if you're trading every single opportunity. And that was it right here was it. You had the mean reversion, had a spike down here, didn't get to that original reference point. You can see there was plenty of architecture in this situation to show you, okay, we're possibly getting a green candle. And that was it. And eventually one did peak green. You can see it peak green, and it still came down and let you off right here. Still let you off on that. And you notice that the spike down was probably close to where you would have pulled your initial trade if you started the sequence back here. And that's the entire point of trading in trend and not looking at one chart, but understanding the cycle, where that higher time frame's headed. This was the trade. This was the overall trade, and these were the trades within a trade. You know, right here, trade within a trade, trade within a trade. As you guys can tell, I really like this stuff, so I get pumped every time I talk about it. Let me do some reading, catch up. Okay, hang on, guys. I got about a million comments that came through here, so one moment. Okay, good question. I think I'm trying to understand the question hopefully as clearly as possible. But question is, if there's an expansion line but no box before it, does it still make it valid? Yes, absolutely. This is a proprietary algorithm. Um, I'm not even going to tell you how many thousands of hours went into this. Okay, a long, long time of plotting these lines manually, and a long time of getting this to what it is today. And it still has more to come. There are still some more tweaks, but when you get a white line, that's a formula that's tracked, and these levels are all representative of what they should mean. Expansion means expansion. It means a tipping point of buying and selling between the masses. So if you get a breakout with a box below, you see we're getting a reverse breakout against the trend over here. That means that short-term traders are going to trade this long. We're going to take the other side of that trade from them. That's what we're going to do, because we know it's almost like a pump and dump is what we're doing. Like if you were just looking at a 4-hour chart, this is the pump and the dump right back to zero. But we're going to go farther than that because we know that, you know, price is going to keep going. So you got to look at these white lines. These are the setup of the market. These are what give you the architecture and the boundaries to kind of figure out where price is going to flow. But if you get one with a box or without a box, they mean the same thing. It's telling you where that dividing point is. So even this one, we got this breakout on this box, and a lot of people, one thing that they ask is like, well, because that's probably the biggest question we get on the YouTube channel, on everything, is like, what about the expansion? I don't see how this software shows you the 3 market phases. I'm like, it's showing you the defining points of what turns into those. The market can do whatever it wants, but it has a habit of breaking out and whipping back and forth. What we're doing essentially, like this right here, it broke out and it came back. But some people say, well, this one just broke out. Why couldn't I have traded that? Well, if you look back to this one, this is your expansion, your picture perfect expansion happening here. Here is it up, here is it down. And this box, this breakout is a continuation of an expansion leg that was formed back here. So you got to look back into your chart a little bit to understand the overall cycle. That's how you initially compare what we're doing to the master pattern video. But what we're doing essentially is, because we can't see in hindsight what's happened, you're getting the contraction points because those are very easily defined. You don't need our software to define contraction. Okay, it just automates it for you. In fact, you don't need the software to do anything I'm telling you. If you guys decide you want to do this without it, you can. You know, doesn't hurt our feelings. But what it does is it's showing you this in an automated way and tracking those liquidity line levels. And what we're doing is we're expecting, when we get a contraction box in trend, when we get that counter trend liquidity, and you don't see this, all you see at that moment is this, right? That's what you see as you're going into this trade, hoping that this is going to hold on the weekly. What we're expecting by trading counter trend expansions like this, we're expecting they're going to turn into this. We're trading the first half of the expectation that it's going to turn into that picture perfect expansion. But we don't know that until it's already happened. So that's what you're getting right here. You're getting the first half, and here's your second half, but the second half is putting you into the money. Hopefully that makes sense to everyone. The methodology with what we're doing is probably the simplest out there. It's probably the simplest you'll find anywhere, if you let it be that way, if you keep it simple. Is it perfect? No, nothing's perfect. But if you guys follow the basics that are taught in the online course, and you do those, you will eventually get a good enough feel for this where you will be able to take other types of trades, because you'll be able to look at the screen and you'll know the probabilities. You'll understand where that higher time frame's headed. You'll understand what the probabilities start to become. You'll develop a great feel for that. But it only comes with looking at this for a while. So what we tell you in the courses is the most systematic approach you can get to, as far as like define your directional bias. What color is the candle? Enter above expansion, enter below expansion on the lower time frame. It's super, super, super basic because it needs to be. So you guys, you really got to plan on, if you believe in what we're doing here, and the only way to believe is you got to go look at the charts. You got to spend some time with it. What you're seeing in the past, go back test, go look at how it behaved. When I first put this algorithm, I spent thousands of hours. I'm not even lying, thousands, including Saturdays when the market was off. People would be out doing other things. I was looking at charts and I was developing this for so many years. And that's what it takes. There's no easy way around trading. But what you have here, if you like it, is this is a solid platform. It's a solid platform. It's not going to repaint. It's not going to change. It's going to give you the same activity, the same visual every single day. And what we're looking at today will be relevant 10 years from now. It will never change as long as people and people's personalities and their emotions are trading markets. It will unfold this way. Some of you may say, well, what about high frequency trading? What about this? They're going in for fractions and fractions of price movement. And mostly that's in the stock market. They're just front running orders. That's totally different than what we're doing. That doesn't change the overall mass behavior of what's going to happen and how markets are going to change. It just comes down to a belief is born in a trader. Something on the chart is going to tell you why you want to buy or sell. I don't care what indicator you're looking at or what it is. Could be just price action. You're going to buy and you have a breaking point where you're going to sell, or you're going to sell and you have a breaking point where you're going to buy. And that right there is where the safe liquidity is to get in. Anyone buying in this run long right here, or they're buying. You know where their breaking point is? It's right here at that liquidity line. Boom, blows them out because they were trading against the bigger crowd over here. They get blown out. We take the other side of their trades all the way up. We see that rotation right here. It becomes a successful trade. When we get back to that expansion, we're already significantly in the money. Boom, comes down. Look at that, even holds below. And then you get another rotation. At this point, we're not entering. We're not entering anywhere down here. We're not trying to sell this market. You can trade this. Now, if this was a 4-hour, these are all your 4-hour trades down here using the 4-hour into the 15-minute. That's where that comes into play. But if you're trading the 4-hour for entry, the entry was up here. That was a safe entry on the 4-hour. So you're looking just to get down, back down to here, and that's it. We're taking the other side of those beliefs that were formed, thinking they were going to catch the bottom of the trend. That was the opportunity. So, like I said, real basic. All right, we're getting to about an hour and a half here. I'm going to scan through and see if there's any shorter questions. Hopefully this has been helpful for you guys. Mark, I see something about not getting a coaching session. I apologize if we did miss you. We've had so much craziness going on. I'm going to be straight with you guys. I never imagined that this program would get to what it is. I had my core group of people that started with me. I know some of you guys are on here. Appreciate you guys being with me and hanging in there. I had my core group people. I really didn't honestly care too much about promoting this. Really didn't care. I have my own life and other things that I do. I love trading. It's passion, but I just wanted to keep my core people going. That started with me a long time ago, make sure that they got what they need. I know I got people that rely on this, so I always kept it live. I started the online course just to make sure that, if they referred people in or something happened, like that, I didn't want to have to train everybody personally. So I made the online course, and that's what it was there for. I put a couple of videos on YouTube. Honestly, this is how it happened. And I didn't really think people would care what I had to say. So I got to say I'm humbled now to say that there's like one of the videos has like over 200, almost 250,000 views. And I think probably a lot of you guys were initially that are on here were drawn through that. And that video is all it was I'm telling you the same thing on here. It's no different. That was essentially the basics of everything that powers the software, not algorithmically, that's a lot more complicated, but what we're trying to do, it's a basic concept. And, I put that on there and just exploded, to the point where we had to stop letting people on because, I have a pretty small team. We're growing now. I'm hiring people, and my brother's helping me now, and we're getting some things going. But we had to go on that waiting list, or put people on the waiting list, because I just couldn't do coaching calls and couldn't do everything that I had been doing up to that point. Because my main interest, and you guys, I've told you, almost all of you on the coaching call, is I'm not interested in having people come on here, pay $150 and leave a week later. I know some people will, regardless of what kind of good tools they have. I know it's going to happen. But my interest is that you guys see value and use this and understand it's a long-term game. Um, honestly, I could sell this for a lot more money than what I do. Something like this, as stable as it is, as predictable as it is. I get people every day that offer they want to buy it. They want to, how can I just buy? They don't want to rent it. They just want to own the software, and I won't sell it. There's no price I could put on it. What am I going to sell it for? 50 grand, 100 grand? I don't want that much money from anybody. I don't want to. Trading is not for everybody. Let's be clear about that. So a lot of the programs out there, people are they charge $5,000 and going up to anybody who can fog a mirror. And I don't care if they're teaching the most perfect strategy, that person just may not have the temperament for trading. And now they're out 5 grand. And I understand that about the business because I've been in it a long time, and I don't want to approach this that way. It's $150 for you to test the water with something that I think is world class. I love it, at least, and that's all that matters to me at the end of the day. And if they find value from it, then great. I'm happy to have them on board, and hopefully they become a long-term subscriber. But if they don't, fine, no problem. But since this is growing, what the ambition is to grow to a big, not a huge, but somewhere probably around 500 traders is kind of what we're shooting for worldwide. And that's after people fall off, people that aren't serious, people that listen to nothing we say. They want to overcomplicate everything, and they won't do it the way it's intended, and stick with it that way. Those people fall off, and I want to be left with like 500 people that get it and find value and are long-term subscribers. So at the price point we're at, it makes sense that way. And we're willing to do these webinars and put in the effort and support you guys to make sure that you get there. And like I said, if you just can't see it, or it becomes an issue, you're not out $5,000. And that makes me feel better about it, because I know that's going to happen. We're trying to put forth a very, very honest effort to help people. Hopefully you guys get the sense of that. That's the first concern, above and beyond money or what can be made or what can be done. We want to give you guys the best we can. That's why we gave out ATS Assistant. We didn't charge anyone for that. I spent a ton of money on it, and it's just the first version. Believe me, there's better things that come with that. But we didn't charge for that. We just gave it to you because we thought it could be a helpful tool. So we're trying to build a long-term relationship with our subscribers and give them our best, because that's what it makes sense to do. We can make a lot more money in the short term. There's 2,000 people on the waiting list, so you guys know right now. 2,000 people. We're getting emails every day about people that are mad that they can't get in. They think we're holding out on them. So we're running into different problems now, because ultimately I don't think I could really support those 2,000 people, and I don't have any ambition to. But what we're going to do is we're going to start letting them on, a handful at a time, and I'm just trying to find the people that get it. I don't expect everyone to, and once we find that core group, honestly, I'm probably going to shut it off, any kind of marketing or anything, and we'll just ride with those people and maintain that 500 is kind of what I'm looking for. It may change a little bit, but that's it. So you guys that are on, hopefully you guys are seeing some value from it. That's what we want. If you don't, if it's not for you, like I said, there's no hard feelings. We're happy that you gave it a try. And if you want to give it a try later, we're always here. Once you're kind of in our network and in our group, then we want to be there for you. But that's it. You guys know the story. Hopefully we narrowed down some things you could trade on. And we're going to look to do this again next week. So I think that's about it. So anyway, I'm going to let you guys go now. Appreciate all you guys being on and supporting the webinar. Just a quick note, um, we may be switching the webinar. Wednesday seems like a good day, but I got people in every time zone now. So there's a lot of people that can't get on it at whatever time we put it on. So, what we're going to probably play around with a few different days. I may go to Tuesday next week. I don't know, but whatever we do, we'll send you an email. Make sure you guys unblock us from your spam, because a lot of our emails, sometimes they go to people's spam and they're like, I didn't get this, I didn't get that. Try to always check your spam, at least for our emails. And we're not going to send you junk content. I'm only going to send you stuff that's either useful or it's important regarding our program. I'm not going to send you a bunch of upsells. I'm not going to give your information to other people. We have no affiliations with anybody. We're not looking to leverage the relationship and make the most money. We're trying to have serious people. When we send you an email, it's typically serious. So please look out for that, all right? So, all right, guys, that's it. I'm done talking. I'm tired, and I'm gonna call it a day. So thank you guys for being on, and we will catch up with you guys soon.